Trader Merlin show for another whiplash session. I hope that you all had your neck braces ready today for some wonderful market volatility. March 1st is the day, so let's see how this month kicks off. We've had two fairly negative months overall for the equity indexes, but hey, hopefully it'll be another wild ride for us going forward with all the tension that's going on around the world. Now, there's been several questions that came in. I think Thomasina and Lori had questions in the past about different options platforms. You know, which one's the best is always a question I get. And it's kind of like saying, well, what's the best car? It really depends on what you're looking for, what you're using it for. So nobody can say this is the best. Well, other than Caddyshack is probably the best comedy movie ever made. But see, we'll get arguments on that one right away. So today I wanted to bring on somebody who uses, I trade options, definitely, but nowhere near to the level that Corey Lane trades those. So today we're going to look at options trading platforms with Corey Lane of Traders Army. Corey, how you doing, my friend?
Yay! What's happening? How are you?
I'm great. It's good. I'm glad to have you back on. How you been?
I've been really good, man. I've been, busy as always. Everything is good here. I've got trading's going well. I've got a lot of construction around the house and kids band and all that super fun stuff.
Construction? Are we going like 4 or 5 stories? Are we building the viewing platform on the roof with the infinity pool? What's going on over there?
Well, I do have a new pool and spa and barbecue and all new, basically an entire new backyard experience.
Wow. All right. Well, I keep checking my email. I don't recall getting an invite up to that experience, but one of these days we'll get there.
Well, that's because it's not done yet.
Oh, okay.
We started in March of last year. We are going on 1 year to get this project done when they told us it should take no longer than 18 months.
Wow. All right. Well, you're still under a year or under 18 months, so you got 6 months left.
I'm sorry, 18 weeks. 18 weeks is what they told us. Sorry.
Oh, well, that's bad.
18 weeks. Yeah, a year.
All right. Well, might I suggest in the future in any contract you put a provision that says if you don't complete it by this date, you start to pay me back some of the money I owe you. Anyway, never mind. Let's not do contractual negotiation on today's show. Let's talk about options trading platforms. As I mentioned in the little start there, I get asked all the time, what's the best platform? I'm sure that you probably have a personal preference because you've used just about every options trading platform out there. So let's start with, we'll work down to maybe what you feel the best platform is, but let's talk about what are some of the key things that are critical for you when choosing a trading platform for options.
So specifically for options, you obviously have to have access to the options market and a pretty in-depth option chain. And for me specifically, and I know a lot of my trading partners, we use a lot of the option analytics. And what that basically means is when you want to plot or model out a potential position, or you want to model out 3 different potential positions, and you want to see how those positions would behave if stock price went up or down, volatility went up or down, time goes by, things like that, then it's really important to me to be able to model that stuff out ahead of time to eliminate surprises, or at least reduce the amount of surprises once in the trade as things start to kind of happen in the marketplace. I kind of already have an idea of what would happen to my option position because I modeled everything out ahead of time. And to me, that's absolutely non-negotiable. I have to have those things.
Now, when you say to model out ahead of time, obviously, when we look at options chain, I think actually one misconception might be that they're all the same. I mean, generally, they're going to have things like, your bid, your ask, maybe implied volatility, open interest, things like that. Are you looking for that basic, or is there some other little extra pieces that maybe your platform offers that some generic ones don't?
So if we're talking about just the option chain and not actually modeling positions out, the option chain is generally going to be pretty standard. I've found across most platforms.
Yep, right.
Obviously, each platform might have their own, little thing that might be different. For instance, one of the things that we have that I use all the time, not just for my own trading, but inside of our Wealth Essentials for model portfolios, long-term investing, using options for that stuff. There's a calculation that's really simple to do in your head or using a calculator, but looking for return on risk when selling puts. It's such a simple little calculation. If I'm selling a put for $1 and the market's tying up, the broker's tying up $50,000 for the position, what's my return on that risk? And you can do the calculation, but there is a column in Thinkorswim, which I use Thinkorswim, and I've used them for, a little over 15 years now. There's actually a column that calculates return on risk. So for me, like, that's a really nice thing to have, especially if I'm going through, 200 different stocks and ETFs to try to sell some options on. And I can see what that return on risk is without having to think about it, without actually having to do the math. That, by the way, I looked for. One of our members asked the other day, hey, is that calculation in TradeStation? And we looked, and it's not. And I was like, okay, well, I mean, it's really not a hard calculation. So there are little differences that each platform may put in to their option chain, but for the most part, they're pretty much standardized.
Right, and that's why I asked, because I think that there is, even if you look at something like CliK, which is the platform that we're building out at OTA, they've taken some of the best features and functionality, and you start off with a template of this is what an options chain looks like. But that little calculation for me and for you as a trader, at least I think anybody who's had a long career at this, managing your risk at all times is the key to success, period, regardless of what strategy or tactic you're using. So if you have that little column where you can say, wow, this one might be too risky for me, or hey, it's got a great risk reward potential, then that, I think, it helps facilitate the trading process much quicker without any, obstacles or need to process those calculations manually.
Yep. And, I think we can all process them manually, but if you can do it faster, why not?
Well, yeah, I can also run down to the local corner store fast too, but I'd rather take my electric bike and do 30 miles an hour, so.
That too.
All right, so go ahead, you were going to say them?
I was going to say, but when it comes to modeling out positions in options analytics, that's a whole different piece of software that lives inside the platform. That allows me to model. I could demonstrate that if you guys want to see what I mean by that. But
yeah, let's do that.
Out potential risk reward and what ifs. Like, for instance, Interactive Brokers. I've traded extensively with Interactive Brokers too, and they're overall a great execution platform. But from an analysis standpoint, they don't have much in the way of analysis tools, especially for options. They have a couple things, but really nothing that I find really useful.
Let's look at that a little bit. If you don't mind sharing, because I think modeling is in my mind, I think I understand what you're talking about. I model out my trades as well and map everything out, but you might be doing it a little bit differently. So let's let you take the screen and show us what you mean.
All right. So let me see. Share screen. Oh, look at that. There's a button for it. Let's go with that. You see that?
Yep, got it.
I should be sharing Thinkorswim.
Yep, we got it.
Okay, so let's take a for instance here. So this is Thinkorswim, and I thought I saw Margaret. I'm watching your chat box too, Merlin. I hope you don't mind.
Please do. Everybody, he's watching, so you can feel free to chat him. Remember, if you want to send questions to us directly, put question marks before it so we know what's sent to us, just like Margaret did earlier.
Yeah, awesome. And so Margaret asked a question, what type of IV meter do you use, implied volatility? And so this is my implied volatility tool that I use down here, which is basically the standard implied volatility, average implied volatility that exists on the options, which, again, most trading platforms are going to have that. But what this one is it's customized to show me what is high volatility in this red zone and what is low volatility in this green zone. And then the middle white zone is just sort of, kind of the middle of that, the middle 60% of the 1 year range. And, for years, I would look at just the chart without these green and red bands. And just like support and resistance analysis, you draw your resistance line and you draw your support line and say, where is implied volatility in relation to high points and low points? This little indicator that was customized by one of our members for Thinkorswim just makes it easy for me to spot if we're in a high or low volatility environment.
Right.
So just kind of hitting that. So having a way to gauge implied volatility, that's another feature that I have to have, which is usually part of the charting package. So if the platform doesn't have a great charting platform, then that platform's not for me.
Right. Yeah. So say goodbye to basic Yahoo charts, guys. You need something more interactive.
Say goodbye to Yahoo charts. And for me, I could never really make sense of using, even the interactive broker charts.
Right.
You know, I don't know, Merlin, if you ever have any experience with them, but
I have, and honestly, I love them because they were really cheap. But their platform, honestly, I had to stop using them. I just couldn't make that platform work. I was actually doing my analysis on other platforms that I'm better with, and then did the execution on interactive. But I moved away from them.
Same thing. And I thought TradeStation, when I was using that, I was so fast and so the TradeStation charts are just fantastic.
Agreed.
But I couldn't really deal with some of the option trading functionality on TradeStation that I can talk about a little bit more in depth here in a sec. But let's take, for instance, Las Vegas Sands, right? I'm not recommending this trade, but it is one that I'm certainly watching for a decline back into this gap up, which took out a lot of this resistance to the left. So I look at a chart first always, and I say, okay, what is my overall directional, bias? And if I had a bias that said, hey, price comes down to 39.25, then I want to own the stock, or I could buy a call, or I could sell a put, or I could sell a put spread, or I could do a number of different option strategies. And so what I would do is I would first then come over to this tab at the top, which is our Analyze tab, and then it would pull up an option chain. And let's get rid of that so we don't confuse current positions with new positions. And so if I type in LDS, it brings up the option chain for Las Vegas Sands. And what I can do is, just like any option trading platform, I can expand any one of these. And I can say, okay, if I want to model out buying a call, then I go out 90 days or more, and I look at buying an at-the-money call, for instance. Right, for 470, maybe I can get in for around 460, 465 if I'm splitting the difference between the bid and the ask. And so most would say, okay, what's my delta? 55. What's my theta? Negative $2 a day. What's my vega? 8.5. And they would stop there, and most would even just look at their delta and say, I just want to buy this call because when the stock goes up, here's a big mistake a lot of people make. I'm just going to buy a call because when this stock goes up, like I think it will, I'm going to make a ton of money. And that's not always the case. Merlin, you and I, and probably a lot of your listeners right now would agree, if you've ever traded options before, just because the stock goes up doesn't mean your call will go up with it.
Right.
It depends on how quickly that stock goes up. It depends upon what happens to volatility. So now I can come back and I can say, where's volatility? Oh, volatility is at 61%. So if volatility, which is very high right now, just kind of due to the overall volatility in the stock market, and then, of course, Las Vegas Sands is dropping now. If I anticipate anything to happen from a volatility standpoint, what would generally happen if the stock price hits this demand and rallies? Well, anytime this stock tends to rally, volatility, can either remain stable or even drop. And so if I experience a drop in volatility from, say, 61%, even down to 51%, just halfway to the low volatility environment, just drops 10 percentage points, then that's going to hurt this position. And so what I mean by modeling this out is I can say, okay, I'm considering buying the call. Volatility is kind of high. What if, and I'll open up this cog here, what if volatility drops, and I can type in, oh, why is it not doing that?
Always when you want to give an example, it never works, right?
This little section of the platform has been weird lately, but what if volatility drops 10%? Then it'll actually show me up here under my theoretical P&L what would happen to my profit and loss, to all of my Greek exposure, as a matter of fact. It'll actually adjust based upon a vol drop of 10 percentage points, what happens to my theta, my net vega, my P&L. So I can say, what if the stock goes back up to this gap, 45, and that's my price target. Mm-hmm. I can come out and say, stock goes to $45, I'll make $212 if the stock gets there. If the stock drops below 37.10, that's my stop, then that's my risk. And now what I can see is, if I take away that 10% drop, and I just go back to say no drop, what if volatility doesn't drop? I'm risking, let's just call it $170 to make almost 300, right? And that's not an incredible risk-reward relationship, but let's say you're okay with that. And then you say, okay, well, great. Well, when the stock gets to 45, I should be able to make almost $300. Not so fast. it's probably going to take, once it hits this area, it's probably going to take, a week and a half to 2 weeks to get back up to 45. So that's theta is going to reduce the amount by which I make money. Well, how do I model that out? So what if it takes, instead of no days, what if it takes 2 weeks, right? And it gets there on the 16th of March. How's that going to impact my reward and my risk? Well, theta being negative is going to reduce my reward potential. It's going to increase my risk potential. And now my risk to reward relationship is getting worse. Then you can say, well, then there's that pesky, volatility. You might say, well, what if volatility then drops 10 percentage points? Holy crap, now I'm risking $270 to make 190. And so when I model it out, what I can say is, what is the probability first of the stock going up pretty high? What is the probability of days going by, guaranteed?
Yep.
What is the probability of volatility dropping if the stock goes up? Probability is pretty high. So I can plug all those what if factors in, and it then tells me, is it still worth it to consider this trade? And to me, the answer for just buying a $40 call, the answer is no. So then I would say, okay, well, let's ditch that, and let's go for, maybe we'll sell a $37 by $34 put spread for 95 cents. And so what ends up happening is I can keep all these what ifs in, and I can throw different what ifs at it, and that allows me to choose the best strategy for my outlook on time, volatility, and stock. And hands down, from what I have found, Thinkorswim is one of the better built platforms for this type of analysis.
Yeah, and I think that the interesting thing is most people aren't going to do that type of analysis. You look at, at least the vast majority of options traders that I've seen, they'll look at the delta, but they're not going to go in and do what if scenarios and start recalculating, how implied volatility is, or volatility is going to adjust it, or maybe look at theta, or how much time is left, and what happens if it takes 2 or 3 weeks to get to the point that I think it's going to get it. And I'll be raising my hand. I'm not that person either. I don't do the planning. I just look at an option and say, okay, this looks good to me, and I make the play. So I obviously have some room to improve my game. But how much do you think that this has improved your game? Because I know when you started, I'm pretty sure that you weren't looking at all these what-if scenarios. It was like, okay, this option looks good, let's make the trade.
Actually, I the exact opposite. I was taught from the beginning I need to pay attention to this stuff.
Wow, okay.
And what I found is when I really started to dive into this type of what-if analysis, hands down, it was one of the best teachers of how to truly understand options mechanics. In my options courses and my trading rooms that I host, every week, I don't toot my own horn, but the emails that I get from people regarding, my gosh, I've heard options explained by 10 different people, and I've never understood it. But in an hour trading session, you cleared up so much fog for me. It's amazing your depth of knowledge on options and how all the mechanics kind of work either against or with each other. And I don't think that I would have that level of intimacy with how they actually, work if I didn't do this type of modeling. And so I was taught from the beginning that you should look at those things. Being that I started out with zero trading experience, I just basically said, okay, if you tell me I need to look at it, I'm going to look at it.
Yeah, no, it's
and a couple of the people, like some of you guys, Matt Gildy,
yep,
Merlin, he was one of my first options instructors, and he was like, you got to look at this stuff, man. He's like, most people lose money in options not because they're dangerous, it's just because they don't understand the mechanics.
Yeah.
So this is plus I'm an analytical guy, so it even if somebody didn't tell me to look at it, I probably still would. But I took that advice seriously, and I think it helped me over the long term. Because now, even though I still do the modeling in the platform just because it's efficient, I could technically do it by hand. If you give me a piece of paper, I could hand draw risk graphs and hand calculate how delta and gamma and theta are going to affect my option over 10 volatility points and 15 trading days. And I mean, I could do all that by hand because I spent time in the analytics. So for me, this functionality in a platform, non-negotiable. I have to have it.
I love it. I'm actually
It's
just kind of
efficient.
looking through some of the chats here. Like Joe's like, oh man, no mention of the platform I use, which is the Merrill Lynch Edge. Look, and Merrill Lynch Edge, it's just something that I think is it's leaning more towards the longer term investor platform, but not that it's a horrible platform. I mean, I can't make that assessment. I have never used Merrill Edge's self-directed platform, but for most of the people that are in that options space, that are in the trenches every day doing it, it ends up being, you hear Thinkorswim kind of rise to the top, and we'll ask Corey what he thinks is the best, but I think we kind of get the idea. Thinkorswim is up there. You've got TastyWorks. You've got some other different options platforms, and every one of them is going to bring something to the table. I used to love TradeStation, and for options, it really wasn't the best, but I was trading everything. So for me, as a universal platform, it was actually pretty good. You just have to deal with TradeStation and their customer service and their crazy account rules. But other than that, not a bad platform. All right. So
there are definitely things that are not great about Thinkorswim. Don't let me make you think that, hey, this is great for everything. Like one of the big things that I have a problem with on Thinkorswim is their futures margin requirements are through the freaking roof.
Yeah.
It's really inefficient to trade futures at Thinkorswim.
But, and again, that's just, I love that you brought that up because it really is it's really boiling it down to what platform fits what you want to use. So, for example, one of my good friends, Trey Lazara, he runs a company out of Texas called Trade Pro Futures, which has some of the best margins in all of the financial markets. It's like, well, okay, he's got great customer service, tons of different platforms, but he doesn't spend a ton of money on marketing, and most people have no clue who this guy is. So, you dig around, you find out what platform it is, and then you find out, the back end, who's going to support you from the admin and the account stuff. And you find what works best for you. And for your case, what don't you mentioned the futures margins? Is there anything else that you don't like about TOS?
For me, you probably know Merlin, but I operate off of Apple products, and Thinkorswim, when I've noticed over the years as they start to build in more features and functionality, it's starting to put a lot of pressure on Apple computers. I hear a lot of complaints about that, not just from myself. So I don't know if there's some coding issues with Macs on a Thinkorswim platform versus Windows machines on Thinkorswim. But when I used Windows machines when I was teaching for OTA, Thinkorswim ran quickly. Then when I moved over to my Mac when I got home, I noticed it was sluggish. So I'm not a big fan of that. I'm in the back of my mind, it's gotten so slow on some days that I'm like, who else could I use?
Right.
You know what I mean?
Yeah.
One of my good friends, Lex Luthringhausen, who is kind of VP and head of design up at this brokerage house called TradeStation, a shop out of Chicago. They've been developing a platform called TradeHawk. Mm-hmm. Which is an options trading platform, which we demoed the latest version with him, and it's outstanding. It's a competitor for Thinkorswim for sure. The interesting part about TradeHawk is they have they're such a small boutique shop that they're like, hey, listen, if you want specific functionality or specific option chain menus or indicators, let us know. We'll have them written by the end of the week. And I'm like, will you do that for anybody? Because that sounds awesome. Second thing is they have a subscription-based commission model, which commissions used to be a big deal for brokerage houses, but commissions are dirt cheap now. I think Thinkorswim, I pay anywhere between 10 cents and 65 cents, depending upon the account size per contract. But TradeStation and TradeHawk is charging, I think they're like $80 a month flat, and it's unlimited option trades monthly. I'm like, well, that's not great for someone who's new trading, a couple contracts here and there. But one of the accounts that I manage, it's more of a fund than it is. It's a pretty decent sized fund. We'll trade tens of thousands of contracts a month. A subscription-based model would be great for somebody who trades that kind of volume, but not so great for someone who trades 5 contracts a month.
Yeah. Right.
So those are some of the things. If I wanted to trade all assets, Forex is not something I would trade at Thinkorswim. even, I do trade some futures. I can't say that futures is a majority of my trading. Options is hands down a majority of my trading, which is why I'm still at Thinkorswim. But for the most part, I don't have too many complaints about Thinkorswim when it comes to option trading.
Right.
It's when you get into like futures and Forex that I have sort of moved away from loving the platform for that reason.
There was a question about, Margaret asked about Charles Schwab. I just brought up Charles Schwab right here. And I mean, when you look at the difference in the platforms, I mean, they're significantly different. This is their basic options. So here's your basic. I can type in SPY here. And, you notice that it's nowhere near as robust as what Corey is showing on this screen. I mean, this is kind of, with Thinkorswim, you have everything all in one. And I think that's the nature of this industry, is you have a platform that might have started off as a stock trading platform, and they have, there's some basic bells and whistles, and then they go, well, we have customers that want to have futures, so they get some basic futures functionality, some basic options, but they don't like specialize in a specific asset class. Thinkorswim years ago was really their main focus was only options. That was it. And then they brought in futures and stocks, so that's not their expertise. Options is really the mainstay for Thinkorswim, even though they do have other asset classes. It wasn't built for futures. It wasn't built for equities. It was built for options. And, to me, that's important to understand. When you go with an E-Trade, a Ameritrade, a Schwab, those types of accounts, they're going to have basic functionality across all asset classes, whereas something that might be a little bit more tailored specifically towards an asset class like Thinkorswim could give you better tools and functionality. So, again, if you're a futures trader using Thinkorswim, you have some issues there. Whereas if you're using options on Thinkorswim, great. You probably have some of the better tools out there.
Yeah, it's like Michael Jordan was built for basketball, not baseball.
Yet he played both.
Yeah.
I think
that's the only sports reference you'll ever hear me say, by the way.
Really? Oh, man. I love sports references.
Yeah, but I know nothing about them. I don't even know if that was a good one or not, but...
It was actually pretty good. Let's see. So Serge asked, Corey, what's your view on zero data expiration options? I know that this is a popular strategy amongst a lot of people, and from my perspective, zero DTE, it can be great. You go so far out that the odds of those options expiring in the money are pretty slim. However, especially with the market we've had over this past week or so, you have these monster swings, and you're chipping away with those strategies to make a little bit of money, but one big down day can eradicate weeks of gains. I don't know what's your take on zero DTE.
Yeah, I don't mind the 0 day to expiration trades, which is, again, primarily going to be on the SPX, right? That's where most people are doing it because they're the most liquid options. But I don't mind them, but I don't feel like I can find the highest quality trade every Monday, Wednesday, Friday.
Mm-hmm.
When I find them, I don't mind trading them, but more times than not, I end up disqualifying the trade because one thing I don't do, which I think a lot of people actually do, is they modify their own standards and rules and what they need and what they're looking for in terms of return and risk-reward relationships. I think they modify those rules, and they modify them because it's only a one-day trade. Whereas I don't care if it's a one-day trade, a 5-day trade, a 30-day trade. I don't change my rules for anything. So a 0 day to expiration trade has to meet the same risk-reward relationship requirements. It's got to be paying me a certain return on risk, or I don't take the trade, even though it's going to expire today. And that has saved me, I think, so much money and so much frustration is not bending the rules just because the expiration window is shorter.
Mm-hmm.
And I think one of the biggest, rules that I think that I see a lot of people, and maybe it's not a rule of theirs, but a rule of mine is I don't take anything less than 15% return on risk, whether it's a day trade or a weekly trade or a monthly trade, especially when selling, which is what most people are doing for the 0 DTE option strategies, or selling options. And I don't accept less than 15% return on risk, because that means that if I'm accepting less reward potential, then I'm increasing my risk when I'm wrong. If I receive more premium up front, then I risk less when I'm wrong. And so if I find myself taking 10% or 5%, and someone will say, yeah, but it's 5% for the day. You'll take 5% for the day, but you won't you won't take 5% for the day, but you'll take 15% for the month. It's not about the return on risk from a bragging rights standpoint, from a return standpoint. If I'm right, I'll make 5%, and that's great. But if I'm wrong and I'm risking 10 times that amount, that's bullshit. Sorry.
Yeah, you can swear in here. It's okay.
I'm not risking 10 times my reward for the day or any day. And so it's less about the return that I stand to make, and more about the risk to reward relative to the return. So for me, I like it. I just don't change my rules, and that means that I disqualify more daily trades than qualify.
So the question from Margaret kind of piggybacked on that one, saying, what's your thoughts on, day trading options? And before you answer, it's funny because for me, day traders were looked at as the plague. Like it was just, you were cancerous if you were a day trader back in the late 90s. And heaven forbid you should day trade options. And now, a lot of people are actually out there day trading options, where people point the finger and go, you'll never make money day trading options. I absolutely disagree. I mean, there's some huge potential out there. What's your take on the day trading of options?
Yeah, I don't generally do it, but I don't dislike the idea of it. I think day trading options, you have to be really well versed in the mechanics of options to make quick decisions about which trades you're going to make relative to what you expect the stock to do. And I just don't think most people are equipped, especially if you haven't been trading options for very long. Most people aren't equipped to make quality option trading decisions as fast as you would need to in a day trading environment.
Yeah.
Right. I think that there's plenty of movement, especially nowadays. There's a crap ton of movement in the marketplace on some big name stocks that offer a ton of opportunity. Mm-hmm. Biggest things to look out for me are going to be liquidity and spread width. And I don't mind being in a trade for a day if all those stars line up.
Right. Yep. There's a question that came in from Lori. I think Lori is probably here with us today. She says, could you please ask Corey what option strategies he is using in these volatile markets? And I think you may have just answered that, because you're like, I don't trade my strategy for anything. But are there some things that you're modifying a little bit to kind of accommodate for really some pretty unprecedented volatility this past week?
Yeah. So, and this is myself, and then also a lot of the members in our community are focusing a little bit more on credit spread situations for no other reason other than the volatility has been so high. And I don't mean the actual volatility, like actual market movement. I mean implied volatility related to options, that the premium has gotten juicier and juicier.
I love it.
And that's the type of environment that we've missed for 12 years, right, Merlin?
Yeah, I love it. Yeah.
And so now we're getting that volatility. And mind you, I've been selling options and credit spreads, still even in lower volatility environments. But nowadays, volatility is high, premiums are rich, and there's a benefit to selling a credit spread that's out of the money by several strike prices, and that is, you don't have to be right on direction when selling a credit spread like you would buying a call or buying a put. You don't have to be right. So you can have this enormous like whipsaw volatility going on, and as long as the stock doesn't go too far against your position, you still stand to make a killing.
Yep.
And so I love the credit spreads for that. Another trade that's been working more so as a hedge is like call ratio and put ratio back spreads. Those are positions that are generally meant for a lower volatility environment, but the volatility just keeps getting inflated. And those types of trades allow you to make money in two different directions. Whether the market goes up or down, it's kind of like a straddle, but not really infinite profit in either direction. You'll have defined profit in one direction, which is if the stock goes the wrong way, you'll have a defined profit potential. But if the stock goes the right way, the way that you thought it would, there's where you have infinite profit potential. So it's a cool trade in general, but the ratio back spreads are cool as a hedge these days, especially when they're coupled with a basket of credit spreads. So those two have been really kind of our primary personal and community-based types of trades right now.
As obviously someone who's in the trenches every single day, not just doing it for yourself, but teaching, how often do you modify or I guess assess the situation of the market? Because normally we get in these nice trending markets, and you can stick with one strategy, whatever that strategy may be, and it just seems to be working and working, working. One thing I noticed many moons ago is everything works until it doesn't, and all of a sudden market dynamics change, whether that's increased volatility or a trend reversal, and what you were using before just doesn't work, and you have to reevaluate. And all the different weapons in your arsenal. You mentioned put ratio back spreads and calls and iron condor. There's so many different strategies with options. How often are you evaluating and saying, hey, this is the most appropriate tool or strategy to be using in this market on this day?
Every time I sit in front of
I was gonna say every day.
I mean, literally, the first thing that I do when I open my platform is, first of all, I look at all my current positions. Well, I take that back. I look at just briefly, where are the futures, right? Are they trading higher, lower, flat? How's that going for the day? And that kind of gives me an idea of when I move over to my actual positions, what I can expect to see. So then I just looked at the P&L of my positions. I kind of look through, I have a grid that I have. You can still see my chart, right?
I'll put it over there right now. Now we see it. Oops, so we want to go right there. There we go.
Yeah, so if you can still see it, I have this grid that this is something that I give to all my members after every trading session. But it's our trade watch list, and these are all the trades that I'm either in or watching right now. And so I'll pull this grid up, and I'll expand the chart, and I'll say, what's happening this morning? All right, Dash is supposed to stay above that red line. It is. Good. Devon's supposed to bounce off that level. It did. Las Vegas Sands is, okay, good. It's coming down to my possible entry area, so I'll be evaluating that in the next day. Iron Condor staying right in the middle of the range. It's great. And I'll literally do this every day. Multiple times a day, just so I can keep an eye on all my positions. And so I'm constantly assessing what's going on in the broad market, what's happening with volatility, what's happening with my current positions in my watch list. And then when I start to feel like, okay, it's time to change things a little bit, is when that moment where like a few trades in a row get stopped out, Merlin, and you're like, well, shit, like obviously something's changing, and I need to look at my bias and make sure it's not a personal bias, and make sure I'm being as objective as possible. And sometimes, actually, every time I change my overall dominant directional bias or my approach or my strategy, it's because I've had a few trades in a row just go like, well, that didn't work, Yep. And that happened to me with Iron Condors a couple months ago. I was just crushing Iron Condor trades, like 95, 100% winners, and then 4 in a row got stopped out. I'm like, okay, well, obviously the market's not range bound anymore.
Yep.
Now it's time to change. And so I use, how many trades in a row was I stopped out on to be my main gauge of environment. Just like really dig into your environment at that point and make sure you don't have a personal bias you're trying to stick to.
Right.
Most of us do for a long while, and the most successful traders that I found are willing to accept that they were wrong. Hey, my personal bias got in the way. It's time to be objective again.
Right. Mimi says, options is hard for me. I really want to understand options. Mimi, let me give you an analogy. Hitting a 90-mile
hard for a baby too.
Yeah, hitting a 90-mile-an-hour fastball for a baseball player is fairly easy in the big leagues. But as a little leaguer, someone just starting out, there's no way on earth you're going to hit a 90-mile-an-hour fastball. And it's about starting off slow, understanding how to read a pitch, understanding the distance, the timing, getting your swing down. And it's like all these mechanical pieces, you start to make them better and you become more proficient at it. And then next thing you know, you can hit a 90-mile-an-hour fastball. Now, that's a weird analogy, but all the stuff that Corey was talking about, some of that stuff may have been completely over some of your heads. Totally get it. Options is Greek in many ways. It has a lot of weird terms, different nomenclature, if you will. The lexicon, that's the word I got at trivia the other night. The lexicon is very different for it. But, when you have a good instructor like Corey Lane here, these things can help become much clearer. It's just don't expect to start trading options and understand it by Friday. It's not going to happen. It's impossible. So step by step by step. Real quick, before we shift here, Corey, on your screen, that little implied volatility gauge you had at the bottom, you can see it's got red and green and it shifts. People are asking, what's this shifting there? You can on the upper and lower boundaries. You can see it kind of jogs. Yeah, right there. Yep.
Right there, it shifts. Yeah, so this is a dynamic indicator that basically it takes the last 252 trading days, which you can see where my cursor is now, which is basically the year. And it says, over the last year, what was the high for the implied volatility? What was the low for the implied volatility? And that's the upper red and the lowest green line. And that's going to be dynamic based upon how things have shifted over the last 1 year.
Right.
And so the more dynamic the volatility is, the wider the range is going to be. And then, of course, you can see over on the far right-hand side here where I'm kind of moving. These are the actual implied volatility averages represented as a percentage. And so in less volatile periods of time, this red and green will actually shrink and get a little bit closer together. In more volatile times, it'll get further apart. And so, this helps because this number, 47.78, which is the current implied volatility for Polaris, by itself means nothing. It means nothing to an option trader. I mean, it has meaning. It means that this stock has to move 47% up or down over the next 1 year to justify today's options premiums. I mean, that's what it means. That's
right.
What 47% volatility means. But is 47% high or low? It's all relative,
yep.
right? I can look at Polaris and say that it has a range of 59% implied volatility to 29%. But then I can come over to Apple, and it has a range of 53 to 21. I can come over to GameStop, and it has a range from 375 to 73. So what's low for Polaris and Apple, what is high for Polaris and Apple isn't even low for GameStop.
Right.
You know what I mean? So it's like, so this indicator not only needs to be dynamic because I'm not just concerned about, all time, I'm concerned about, roughly the last year. So that's why I have 252 J's programmed in there. And I just want to know how high has it been, how low has it been, and I use this kind of as a support and resistance indicator or a supply and demand indicator that tells me there's more supply for options, there's more demand for options, therefore I want to be a buyer or I want to be a seller or a spread trader if we happen to be in the middle of this 1 year range. So the dynamic aspect is kind of critical.
All right. Well, cool. Thank you for answering that one. We can probably stop the share now because I'm going to give you a chance to plug your stuff. I know you've got a lot of stuff going on up here in the near future, and I'm going to bring up your website right now, which is Traders Army. So Joe says, is Corey coming to OTA? Nope, not. He doesn't work for OTA. He works for Traders Army. So this is Traders Army's.
For Traders Army, Merlin.
What's that?
Traders Army works for. No, I'm teasing.
I like that. That was good. I like that. That's a good space. So if you want more information, guys, you can check out tradersarmy.com. If you are in SoCal, talk to me about your Trader Summit in Anaheim.
Dude, we have a super fun event coming up. Ever since COVID started, we started doing these trader summits online. And, we've had such an incredible response from the online version, largely because people were locked in their house and they had nothing else to do. Secondly, it's easy to show up online and, and all that fun stuff. But we've heard a lot from the community that's like, hey, now that the restrictions are being lifted and everybody's staying healthy, yada, yada, can we do one of these in person? And we are, in fact, having a in-person, it's 2 days in Anaheim, so it's going to be close to me. It's going to be close to you, Merlin. And so folks can fly in, drive in. Folks who live here, it's going to make it real easy. But it's over in the Anaheim, not too far from Disneyland, and we've got just an awesome lineup that's already in place, but also I got a few more presenters that many of you probably haven't seen before that I'm going to be inviting as well. And it's a day and a half of presenting, so it's all day one day, half day next day. But the cool thing is, it's actually, if you scroll down on that, you'll see the agenda down there. We're actually having an evening reception. We'll have live music. We'll have giveaways. There's some of the presenters there.
Cool.
You can see them listed. And so, yeah, it's really awesome. We're super excited about it. And it's going to be a chance for us to get together and get out of Zoom.
Yeah.
I'm so desperate to get out of Zoom and start just like, saying hi to people and shaking hands and meet. A lot of our members, which I'm sure is the same for a lot of the folks on the show right now, Merlin, you've never met them in person, or maybe you've met some of them, but maybe not all of them. But I would say probably 95% of the members at Traders Army, I've never met in person.
Oh, wow.
We're always on Zoom.
Yeah.
And so it's like this is going to be a great opportunity for us to finally meet each other and like shake hands and just have some cocktails together. Those drink tickets are included with your enrollment, and the primary can bring a guest, and if you bring a guest, we've discounted the guest pass, and so we're making it low cost for folks to come enjoy just an incredible opportunity to be informed and educated and enlightened. It's like all of our other summits too. I want to make this clear. Like all of our other summits, it's not a sales event. Like we hate that crap.
Yep. Me too.
Is there going to be an opportunity to talk to people and talk to presenters and talk to folks about what they may have to offer and what you can sign up for? Yeah, but you're not going to hear that from the stage. It's just going to be purely educational, informational. If you want to know more, come to the booth in the back and let's hang out and let's talk and see if something makes sense. But we're big on not having huge sales pitch events, especially when you're charging for entrance. So this is something that's designed to be very educational and as in-depth as we possibly can be, given the day and a half that we're going to be presenting.
Cool. Well, it looks like a lot of fun. Tom says, awesome lineup. Where's Merlin? They actually did ask me to be a part of that. I don't know how I can, I don't know where I would fit in. I'm kind of,
I know where you would fit in, Merlin. You just really can't pull that off right now.
I'm kind of, no, it's funny because I was looking through all your guests here, and I don't know all the different topics. I may be able to do something specific that's company agnostic and all this, but I will probably be there. If I can make it, I'll be there on the 16th. I have a class I'm doing that morning, but I would love to come there and just enjoy, hang out, and be with you guys because I see you've got some friends of mine as well with Sam Evans and Brandon Wendell and many of the other guys. So it'd be fun to hang out with you guys as well, shake hands, and hear the kids play.
You're certainly welcome to come hang out. And we actually reached out to OTA and said, hey, we're doing this thing. Do you guys want to participate and send an instructor out or something like that? And I guess they have so many things going on, they declined. But if you can pull that off, Merlin, I got a spot for you, buddy.
All right, I'll let you know. I'll see what I can swing for the next week or so.
And even if you can't pull off presenting, you should still come hang out.
Oh, I will. Either way, definitely will be there. So.
And then Tom says there has to be some whiskey roll for the reception. You bet there is.
Yes.
You bet there is.
Oh, yes. The whiskey. Yep. All right. Well, hey, cool, yeah. Corey. Thank you so much for coming on. I appreciate you sharing your screens, your information about options. Again, for those who are interested, you can get more information about just options education with Traders Army by going to tradersarmy.com. I also put in the chat. I put a link to the summit. So if you guys are local, or even if you're out of town and want to just fly in and spend a weekend in Southern California, or actually a week in Southern California because it's on a Wednesday, Thursday, I believe, are your dates, right?
Monday, Tuesday.
Monday. Oh, May 16th. I was looking at March. Oh, well, hey. I got plenty of time buddy.
No. People have plenty of time to figure out travel and kids' schedules and all that fun stuff.
Oh, I'll be there no matter. I just can't do Tuesday night because I got a class tonight, but Monday night I will definitely be there.
We're done by noon on Tuesday.
Perfect.
So it's basically a full day on, like, really full day on Monday. With the reception and all, and then half day on Tuesday. But awesome. It's going to be awesome nonetheless. So it's out in May 16th, 17th, not March.
It's on my calendar right now. All right, buddy. Hey, thank you so much. Enjoy your show tonight. I hope it's a rockin' performance, and I will talk to you soon, my friend.
Awesome, my friend. Thank you so much. Great seeing you guys as always.
All right, bye.
Later.
Guys, that was Corey Lane of Traders Army, giving a little info on platforms. And, I knew that he had a bias towards Thinkorswim, but it's not just that it was a born bias. It was, hey, I've used all these different platforms over the years and found one that he likes, has all the tools that he likes to use. So for me, it's really It's about finding what tools and resources you need for your trading. If you're just someone who's just going to be doing directional and don't need all those extra tools, you may not need something like Thinkorswim. You might be able to find some other platform that has cheaper fees. If you're specifically looking for futures or options, there's other things you can be looking for those platforms. And I actually had a request from somebody on Twitter was saying, hey, could you do a show just on futures platforms, which I probably have more of a say in that one since I am very options basic with mine. I'm generally just buying directionally or selling put options. That's pretty much what I do with options. I know I should be doing so much more, but I got so many other things going on. I just can't take all the time to do it. So again, if you want more information, you check out Traders Army and get all the info at their website. So let me wrap up here. I'm going to be late today. I wanted to make sure I got to this question here from Kevin. And I know a lot of you sent in questions. There was a ton. You guys have been putting one under the YouTube video. Awesome. I may need to do more Q&A days just to catch up with all that because there were so many, which is awesome. Don't stop. Keep putting those comments and questions down below the YouTube videos. I'm putting them all in my slides so I can get to them as quickly as I can. And if you look at this question, well, let me set the stage here. And Tom, you're probably happy it's going to be an hour show today. When you look at the rules behind the exchanges, we take for granted that they're open from Monday through Friday, from this time to that time, right? We know when they're open and close. But exchanges can do, under extraordinary situations, they can do things that are slightly different, which can mess up the way that your orders are executed and processed. So I'll try to read this rather quickly. This is from Kevin. He says, okay, let me try to explain. So yesterday I was long the MNQ as of Friday and had a good till cancel order set, as well as another bracket order set lower in case I was stopped out and looking to take another long. Well, yesterday the market opened and gapped down. I was filled some 250 points lower than my stop, even though the market had over 2,000 transactions before I was filled and lost 20% of my account. Now, remember, if you have a GTC market order, if that market gapped down 1,000 points that day, it's still going to jump your stop loss, right? A stop limit would have prevented that massive slippage. But because the market gapped down so much, as soon as that market opens up, they're going to execute that market order. Now, what they did, from my understanding, you can see here, it says, CME placed a market in reserve status at the open to prevent a hard drop. Yes, they can limit transactions and slow things down in the morning. Generally, they're blocking batch orders and things like that, but it's kind of complex exactly what they're doing, and it's not my area of expertise. But they did change some of the rules that morning on how orders were being executed. He said, so essentially, he got stopped out of his one, and then it triggered his other order long, now making you long 2 MNQs, and since they were only on limit orders. Several minutes later, they claim the CME removed the reserve status. Yes, that could be found at the CME site, and filled me 250 points below my stop, also leaving me still open one contract since they canceled my original stop market order, making me manually close the new order now at an additional 175 points lower than my second stop, netting about 20% of loss on my account in 4 minutes. Is this true? Sadly, yes. I guess you could go out there and raise hell about... I guess you can go out there and raise hell with the CME, but they're just going to raise their hand to you and be like, oh, sorry, that's just what it is. I'll tell you this, Kevin. You might be able to. I've seen this happen before, where you just go to, who are you with, your TradeStation? You could go to TradeStation and just raise hell and keep raising hell and go on social media and slam them. Sometimes they'll actually reverse it, even though it is in line with what happened, what should have happened, because the CME can modify the order filling rules. As far as them canceling your stop order, I don't think that's what happened. I think that what happened is they were halting some executions, and then when it opened up, your market order got filled right away, which would have happened anyway when the markets opened up. So not exactly sure the total details on your trade, but yes, the CME can put in a reserve status. They can limit order flow. I don't know if they can necessarily cancel your stop orders. That seems kind of odd to me, but unfortunately, that sounds like a significant loss to you. Raise hell at TradeStation. That's all I can really think to do in that situation. Unfortunately, these are some of the weird little crap things that happen in extremely volatile conditions, which is why I've been telling everybody, be really careful out there, because when you have, like we had during the presidential election, all those lock limit downs and the crazy limits during COVID. Remember, you had all those lock limit downs as the markets are tanking. Rules change, and the way that orders are processed by the exchanges can differ. And unfortunately, it sounds like you get caught on the wrong side of that one. And I can definitely see where you're just looking at it going, I don't want to do this anymore, right? That just totally screws up everything. It does. What you're dealing with, though, is a rarity, right? This is not commonplace. It was just kind of an extraordinary situation. Markets are down to 3%, which really wasn't that bad, honestly. If we got to 5, then I think we would have had a bigger problem. But yes, the CME can change things. They can put in the reserve status, which allows them to modify. So Merlin, did you take any profits today? I did not. I am still holding. I am in 105 puts right now, and I'm still holding for more downside movement. Let's see if I'm wrong or really stupid or if I'm totally right. Margaret says, my broker doubled the margin requirements last week. Yes, you're seeing that happen in a lot of exchanges, and brokerage firms are saying we're upping the margins because we want to. It's a risk management piece for them. They're trying to limit your risk exposure, especially with futures and in some equities. Those margin requirements might be changing dramatically. So keep an eye on that as well, because if you're over leveraged, if you're maxed out, and they raise the margin requirements, that could force liquidate your positions too. So check that one out. Chris, if you want to know the lock limit ones, go to just go to the TraderMerlin YouTube page and type in lock limits. This is I did a pretty deep presentation on this one a while ago. I'll just show you. Trader. Great. I love when I can actually go do my own show at the same time. So let's go there. Okay, so here's my page, and if you go to that one, you just go in here and just type in lock limit. You should get right there. Okay, now granted, you have to. I apologize for the screen because this was literally like 2 days after I stopped working at OTA and ended up doing the show out of a closet, which was kind of interesting. But this is the one you want, Chris. It's how to trade lock limits on the market. It's kind of a cool one. So let me pause this because I don't want to feed back through you, and I'll just copy it over and put it in here. This will be the easiest way to get what lock limits are, and back then you can see how to trade them. There you go. All right, so let's go to economic calendar and earnings calendar so I can wrap up the show and get out of here in under an hour. I've got just a couple seconds left. Here is what happened. It will be happening for tomorrow. You can see a lot of announcements, massive manufacturing numbers today. Well, tomorrow you have ADP non-farm employment change for the U.S. You also have Canada with an overnight rate. So there's some pretty big announcements coming out tomorrow. You also have some unemployment numbers coming out for the European Union. And then earnings-wise, you got Turtle Beach, Viva Systems, Abercrombie & Fitch, Splunk, and Dollar Tree all reporting earnings tomorrow. All right, that will do it for the education part of the show and the edutainment. Tomorrow, as I mentioned, I'm pretty excited. Daniel Roberts, who's the editor-in-chief over at Decrypt, used to work for Yahoo. I think he's actually a contributor still over at Yahoo Finance. Just a great guy, really a good grasp on all of the digital asset world. His whole team at Decrypt writing some great content for anybody who's interested in that digital world ecosystem, metaverse, etc. Check him out on tomorrow's show. Should be pretty good content. He'll be here talking about the digital universe in the world. So if you have questions on anything to do with the metaverse, decentralized marketplaces, cryptocurrencies, blockchain, let us know what those questions are. You can send them in on the YouTube channel. That's the best way to do it. So just put them underneath today's show, and I will check all those and have them all set for tomorrow with Dan Roberts of Decrypt Media. All right, everybody, we'll see you tomorrow. Thank you so much. Take care.